Common stock, preferred stock. You may have heard these terms before, but what do they really mean and what are the main differences between these two types of stock? If you're not sure what a stock is, we have already discussed that topic in a previous video, so please go watch that video first before coming back to this one. It will make everything discussed in this video much more understandable. In today's easily comprehensible video, you will learn the difference between common and preferred stock, which is a fairly simple yet very significant question. So without further ado, my name is Daniel, and welcome to the Greenwave. Both types of stock represents a piece of ownership in a company, and both are tools investors can use to try and profit from the future prosperity of a particular business. However, there is a multitude of differences between preferred and common stock, with the main difference being that preferred stock usually does not give shareholders any voting rights, whilst common stock does. So I repeat, preferred stock does not give shareholders any voting rights, whilst with common stock you get some voting rights. The voting rights are usually received at the rate of 1 vote per share owned. Hence, when it comes time for a company to elect a new board of directors or vote on any form of corporate policy, preferred shareholders have absolutely no voice in the future of the company, whereas common shareholders do. In fact, preferred shares function similarly to bonds, since with preferred shares, investors are usually guaranteed a fixed dividend in perpetuity. We will try to cover bonds in a future video because that's a completely different type of financial asset. As a second difference, it is important to remember that preferred shareholders always have priority over the company's income, meaning that they are paid dividends before common shareholders. Dividends is the portion of the company's profits you receive as a shareholder. Simply, dividend income of preferred shareholders is much more guaranteed in comparison to the variable dividends received by common shareholders, which is decided upon by the board of directors. And interestingly enough, many companies do not pay out common stock dividends at all. Next, main difference number 3, which is also the last main difference, common stockholders are the last in line when it comes to the liquidation of a company's assets, which means that they will be paid out after creditors, bondholders, and preferred shareholders. So those would be the 3 main differences that you need to be aware of when perhaps deciding which type of stock to invest in. To summarize, common stock represents the type of stock in which most people invest. When people talk about stocks, they are usually referring to common shares. In fact, the great majority of stock is issued in this form. Common shareholders do have voting rights and thus can exercise some level of influence on the direction of the company. However, for most people this influence is negligible due to the tiny portion of the company owned by any individual investor. Furthermore, some disadvantages include that common shareholders will always be second in line behind preferred shareholders, who have a greater claim or priority to the company's earnings in the form of dividends, and preferred shareholders also have priority or are first in line when it comes to liquidation or the sale of company's assets. Lastly, it is good to know that common stock tends to outperform bonds and preferred shares. Also, it possesses the greatest potential for long-term gains. So if a company does well, the value of common stock can go up. But keep in mind that if a company does poorly, the stock's value can also go down quite rapidly. Now I have prepared just 2 more fun facts to conclude this explanation. Fun fact number 1, the first common stock ever was issued by the Dutch East India Company in 1602. And secondly, a completely unrelated fun fact, preferred shares can be converted into a fixed number of common shares, but common shares do not have the same benefit, so you cannot convert common shares into preferred shares. And there you have it, a succinct explanation of the difference between common and preferred stock. Hopefully this video cleared it up for you at least a little bit. If you have any further questions, certainly feel free to ask them in the comments below. Additionally, if you like the video, consider dropping a like, sharing, and subscribing for more financial content. We are just getting started here and there is so much more exciting stuff coming. So thank you very much for watching and see you next time.